state of California gives State Farm Insurance an ultimatum. We'll let you jack up your rates an average of 22%, but you got to start writing some new policies and you need to massively expand your coverage. Is that going to happen? Let's get into it. Here we go.
Joining us now is NBC's Alyssa Gord, who was at today's meeting in Oakland. How unprecedented is this request, or does it happen often?
It's really unprecedented, Raj. So the State Department of Insurance tells us that it's actually the first request of its kind. So you may notice if you get a rate increase for your home insurance, that happened because the company filed for an increase and the state approved it. There's a normal process. It takes a while. This is a process that's allowed under state law, but has never been used before. So this is...
And the reason it hasn't been used is because dealing with the Insurance Commission in California is such an arduous process and it takes so long that insurance companies have just been like, nah, we can't deal with this. It's such a headache. But now they're at the point where they're saying, due to solvency issues, hey, we need a increase in the ability to increase rates. Otherwise, we're not going to be able to cover moving forward. And so much of this has to do with inflation and the cost to reconstruct and the risk with wildfires that we just saw. How'd that work out for the insurance companies? Not great. They need some more money.
Entirely uncharted territory for the state, and they're being cautious as a result.
And just to be clear, these fires happened down south, but me and you and anyone else watching tonight, if we're State Farm clients, policyholders, we could get our rates raised. Is that correct?
And you will.
It's certainly a possibility. And what State Farm is saying, they just released the numbers yesterday, saying that number that you mentioned, that $7.6 billion in estimated payouts that they expect to have related to those LA fires.
We covered that.
That certainly will play a factor in their financial picture. But they say that even before the LA fires, they were already in dire financial straits. So they said that the LA fires just made it worse. They're saying that things were already not looking so rosy for them.
It's a big number. $7 billion. State Farm says they have to pay out to LA fire victims. Does that mean State Farm loses $7 billion? Or do they themselves have an insurance company?
It's a tricky question, and
reinsurance.
Have their own insurance. It's called reinsurance, and we've actually asked State Farm that very question. They released some numbers just yesterday about that $7.6 billion figure. Some of it they said will get paid out by their reinsurance. Some of it will get paid out by their parent company, which is State Farm Mutual. We don't know exactly how the numbers play out. They released some of it, but we've actually sent State Farm some additional questions today to try and clarify how much does State Farm's California branch have to pay out and whether their parent company could help them out rather than the consumer ratepayers in the event that they're insolvent.
So it's all interpretation here. Final question for you, maybe the biggest question. Will this be approved? Will there be a 22% rate hike? You met with the insurance commissioner today.
The commissioner told us that he hopes to take no longer than 2 weeks to weigh this over, and he does hope to have a decision, but he said he didn't want to be pressured one way or another. One concern, though, is that because this has never been assessed before, is that if this does get approved, it could encourage other companies to kind of step around the normal process and try this way to get rates approved. So they're cautious about what the long-term implications could be for consumers.
It's a big decision. Okay, a couple of weeks.
Monkey see, monkey do. Hey, State Farm requested it. They got it. That's what we're going to do. Pretty good article I found here. Why it matters. Why does this issue matter? Well, clearly, because in California specifically, rates get hiked an average of 22%. So, some of your rates are going to get hiked like 15%. Some are going to get hiked over 30%. And this has an impact on everybody because not only is California going to get rate hikes, but all insurance is going up. I've talked to so many people have told me just insurance policies on bars. How about that? Going up like 20%, just boom. My E&O insurance went up significantly. Errors and omissions for 2 real estate companies, boom, up. I mean, car insurance, home insurance, you name it. Because these insurance companies are paying out, and specifically in California, they're paying out, and they're saying, well, we don't have the money. Wildfires in Los Angeles last month burned more than almost 48,000 acres. destroyed more than 16,250 homes and businesses and killed 29 people. Amid the destruction, tens of thousands of people have made insurance claims to State Farm, the state's largest home insurance provider, equating to millions of dollars. But the company has said it needs to implement rate hikes in order to pay all the claims and avoid a dire situation. So the company's kind of going to California and saying, hey, we're not going to be able to make this go, and we're going to pull out even further. State Farm has pulled out. A ton of other insurance companies have already pulled out, to the point where California's got, they've got the FAIR plan, and that's basically just a state-run plan, but it is far less coverage at far greater cost because it's high risk. You're insuring people who don't have another provider, and if you want to get a mortgage, you need to get home insurance, right? Your lender isn't going to say, it's okay. We'll lend you the money and don't insure the home. It's all good. Fire takes it out. We'll just deal with the vacant land. It's not how the game is played. And big lenders, they're going to say, yep, you need to get an insurance policy. What to know? State Farm requested a 22% increase on average, 15% for renters and condo owners, and 33% for rental owners, to offset expected $7.6 billion in wildfire-related losses. Now, with the reinsurance, State Farm, the arm that we're talking about of State Farm in California, they're only going to be on the hook for like $600 million. But what they're saying is overall, hey, we're not going to be writing any more policies, and we need this premium increase. In April 2024, the company revealed plans to discontinue 72,000 policies statewide, including 30,000 homes. And 1,600 homes in Pacific Palisades lost coverage as a result of the decision. So what State Farm did is they preemptively said, we're out. We don't want to deal with California. The risk is too great. The cost to reconstruct is too great, which they're on the hook for. If your house burns down, it's what insurance is all about, right? Cancellations followed State Farm's announcement 9 months earlier that it would stop issuing new homeowners policies in California. We're done. And so the state of California is saying, all right, we'll give you your increase. This is what's being negotiated right now. We'll give you your increase, but here's what we need from you. We need you to start writing new policies, and we need you to expand your coverage into other parts that you've already dipped out of. And State Farm is kind of, they're hanging tough and saying, no, we need this increase. We can't do the other things you're asking us to do because it increases our liability. And the state is like, don't really care. This is what you're going to do. So it's one of these negotiation type things, and we'll see where it goes. The state's going to cave. They'll make some kind of adjustment that'll make them look like they got something. It's like when you're buying a car and it's a great deal, it's a screaming deal, but you really just want something. Give me $50 off. Give me something. I need to feel like I negotiated something. I can't just leave here with paying full retail, even though full retail has been discounted to get this car moved. So State Farm they're going to negotiate something with state of California. So state of California can say, yep, okay, yep, here's a new situation. So the insurance commissioner says, but now Laura says that if the company wants to raise rates, it needs to guarantee it will continue to grow their footprint and stay in California, not pull out, not discontinue policies. In a brief statement, State Farm said Wednesday's meeting was an opportunity to reiterate to the commissioner the urgency needed to approve the increases. The company did not immediately provide a response to Laura's calls for guarantees to expand coverage. So you've got this whole back and forth thing. Meanwhile, all of our insurance is going to the moon. State Farm's request to make consumers pay more for home insurance comes amid concerns, my favorite word. I have great concerns about the company's financial strength. So they're saying, hey, we're approaching insolvency. This is not this is not something we can continue to do. And here's why. The company said that once it pays out claims from the LA fires, it expects its cash surplus to drop from $1 billion to the end of 2024 to $600 million. Not good. Not good. Not good from a solvency standpoint. Can they move money around? Absolutely. Is this what they're working with? It's what they say they're working with. We don't know, right? We don't actually know because there's so many different factors going on. This is a moving target. But here is something interesting. Meanwhile, on Tuesday, Standard & Poor's Global Ratings, which recently downgraded Chicago because they've got a knucklehead for a governor that we're going to watch testify next week, Standard & Poor's Global Ratings threatened to downgrade the insurer's credit rating, indicating that State Farm's financial stability is weakening, making it riskier for investors and potentially increasing the company's borrowing costs. As that credit rating gets downgraded, they become a greater risk, and folks say, okay, yeah, we'll lend you some money. We'll invest in the company, but we need a greater return. We need more money on our money, interest, right? But LA-based consumer watchdog and advocacy group that's filed a challenge to the rate request with the insurance department and also took part in the private meeting said State Farm has failed to prove the hikes are warranted, accusing the company of concealing critical financial details. Maybe they are. Maybe they are. But this is one of those things where, okay, people can't operate without insurance, so you've got to make something happen. Who's going to blink first? State of California? State Farm? Who knows, right? I think State of California. State of California. Oh, leadership in California. The reason that we're here, the reason that insurance companies are pulling out left and right is, I believe, a lot to do with policy in California in general. Things are so expensive. There are so many layers of bureaucracy. Every time you turn around, you're paying a fee. You're getting a permit for something. To build a home in California, you got to go through 20 or 30 permit processes. It's just insane to protect the consumer. And now they're literally talking about taking off a bunch of that permitting process, self-permitting. Should be fine. This should be fine. Here's another thing to think about. The ability prospectively to continue to stay behind our policies as we enter fire season. What if we get another batch of fires? That's really going to put some heat on the situation. No pun intended, right? It's in jeopardy, sir, and it's a very serious situation, said State Farm General CFO Mark Schwanberger, according to a transcript. State Farm, California's largest home insurer by far, told Laura that even if it received the rate hike, it would not resume writing new policies in California. Laura aims to make a decision no more than 2 weeks from now. Man, wouldn't want to be that dude. You're on the hot seat. You got consumers coming in on one end. You got not only State Farm, but all the other insurance companies, the ones that are left, the ones that haven't left. You've got the state program, the FAIR plan, basically insolvent. Then you've got the other insurance companies that will provide the backdrop of reinsurance for the FAIR plan. What a mess. What a mess. Meanwhile, you've got massive cleanup happening in California. And this isn't just California. You got the whole Maui deal going on. You got Lahaina. You've got North Carolina. You've got stuff in Florida, major, East Coast natural disasters that have happened that have specifically hit these insurance companies. And I don't feel bad for insurance companies. I really don't. They exist based on risk, and they are basically saying right now, hey, the risk is too great. We don't want to do this. We want to get out of here. But the only way we're going to stay is that if you give us these rate hikes. Okay. All right. Whether they're warranted or not, I gotta believe that they are from an operational business standpoint. Are they greedy bastards? When I see my insurance rates go to the moon, I'm kind of thinking, yeah, these are some greedy effing bastards. But what other choice do you have? you got to be insured, right? If you want to run around without insurance and whatever your business is, you're driving your car, not only is that illegal, it's just not a good idea. So you bend over and you take it because what are your options? All right, no insurance, not a good idea. I get sued, I'm hosed, I'm done. You're gonna do it. You're gonna sign that renewal and say, oh, thanks for raising my rates only 36%, whatever it is, right? So the big question is will State Farm, if it raises rates, will it begin writing policies again? And their CEO says, no, we need this to just basically exist to be able to continue moving forward. But if they don't get the increase, Schwanberger said it's possible State Farm could turn to significant non-renewals. We're going to pivot to a non-renewal position to reduce its exposure to wildfire risk in California. So if they don't get it, they're holding the state of California over a barrel and saying, give this to us. It's not really worth our risk to continue issuing policies in California. We're going to pull out even further. Now, you've got a situation where, these companies, in order to do business, not only with fire insurance, but with anything else in California, they basically have to play ball with the state from the standpoint of, you want to be an insurance carrier in California? Here's what we're going to require of you. So we're testing those limits of what does this look like moving forward? Who is going to blink first? It's a fascinating thing from the standpoint of state versus, company. But what you've got on the line, you've got consumers on the line that are going, what are we going to do? Because you've got so many homes in California specifically right now that are going to need new mortgages. They're going to need to rebuild and they're going to need money to rebuild. So they're going to have to go through mortgage process because not everybody has a couple $1,000,000 sitting around so that they can rebuild. They're going to have to go through that process. And without insurance, it's a no-go. And even if you did have a situation where you have cash, what kind of moron is going to say, you know what? My house just burned down. I'm going to dump a couple $1,000,000 into my home and not insure it, which is, you can do that. If you don't have a lender, you can do that. But who has a couple $1,000,000 sitting around that they're just going to have hanging out when their home just burned down? Who's going to do that? Yeah, nobody. So that's why this is so important. This is a critical point in which we're going to see which way this bad boy goes. My predictions, state of California just absolutely caves. Other insurers follow suit. Hey, we need a price increase too. We need a rate increase too. Guaranteed, that's what happens. The beauty of having this on a YouTube channel is we can look back and go, how'd that work out? We're going to talk about it. Love to see you subscribe, hit that notification bell. So when that does happen, we can talk about it. Thanks again for being here. Catch up with you in the next episode. Bye for now.